Okay, thank you for the kind introduction. Hello, I'm Peach, and I'm delighted to moderate this important discussion on household debt in Thailand. Today, our experts will help us unpack structural challenges behind this issue, assess its impact on the economy, and explore potential solutions. To begin, let's take a step back and look at the broader context of the household debt in Thailand. Can you provide some background on the Thai household debt situation? What are structural issues that have elevated the level of debt to 90% of GDP? Which segments of the household debt are the most and least vulnerable? And do you expect the trend to improve or deteriorate? I would like to invite Dr. Roong to start us off.
Thank you. Thank you, Khun Peach. All those questions would have to be answered in 3 hours and not 2 minutes, but I'll try anyhow. The nature of Thailand's household debt, I think, is that we start seeing household first jobbers accumulating debt at a younger age, and we also see retirees still having debt after retirement. And another important aspect is that debt in Thailand tends to be debt that are consumption-based rather than debt for business. So those are the key nature why we tend to be a little more worried about household debt, the high level of household debt. And we also see, I think we have done some researches, and we have seen things like 38% of the Thai population having household debt in the formal sector. That number average around roughly 500,000 per person. But of course, when you think about the informal sector, that number can be significantly higher. And we probably don't know how much it is. Okay. And as I mentioned earlier, we see first jobbers have, and by that I mean people in the age group of, let's say, 22 to 29, in their 20s. About half of them already have debt, and about 1/4 of that are starting to have trouble. These are signs that reflect things Khun Peach was asking about, structural problems in Thailand. First of all, financial literacy. There could be people who don't know how to manage their debt or estimate their income vis-a-vis their ability to pay. There are gaps also in terms of information, transparency, things that we provide to debtors. That's why the Bank of Thailand in recent years, we have stepped up in terms of transparency, in terms of data provision to customers. There are also other things like slow growth of our economy. In part, I think we have to admit that we have a large headwind, which is the demographics. Okay, our demography is not favorable in terms of for growth. However, I think there's still a lot of opportunity around, and especially when we have delayed our upgrade of the structural economy. So that's why we probably need a new investment cycle, and we need to seek new growth engines. And that is another important reason why. So when income sort of recovers slowly, especially after COVID, that has sort of made the debt burden higher than expected for a lot of households. Another one is insufficient social safety nets. A lot of times we find that if the breadwinner of the family becomes ill, loses job, the family may have to resort to informal debt. And that informal debt, loan sharks, is a vicious cycle. And I think going forward, and you probably will hear from some of us, that the initiative to bring those into formal sector lending is something we would like to explore going forward. But that requires what I'm going to highlight here as another another obstacle for us in tackling household debt problem is the lack of data. And because of the lack of data, people get pushed out into the informal sector. And for those who get to lend, who get to borrow in the formal sector, the analysis of their credit worthiness is, of course, still not good, as Kun Payong probably can share with us a little later. So I think these are the fundamental problems that underlie why it's sort of a difficult task, a challenging task for us to deal with the household debt problem in Thailand. But I think it also means a lot of things to do and a lot of opportunity for business as well. But I'll wait for that later.
Thank you, Dr. Roong. So then, Kun Luxmon, from the National Credit Bureau database, could you please share some insight for the situation? Thank you.
Thank you, Kun Peach, and hello, everybody. So we are National Credit Bureau. Basically, we are credit information agency. So what we have is data. So let me elaborate a little bit further from what Dr. Roong just mentioned about household debt situation in Thailand. Right, so let's have a look at data. Oops, okay. Right, this is from the database of National Credit Bureau at the end of June this year, so basically the end of second quarter of this year. The household debt data that we have constitutes around 80% of household debt data in Thailand. This is formal sector, not informal debt though. But I think this is a good indicator of what is happening, what is going on at the moment. So if you look at the graph, you can see that the outstanding of household debt at the moment in our database is around 13.5 trillion Thai baht. Well, that's a huge number, of course. But what is interesting is the way the graph is going. We have been seeing rise in household debt for quite a while. But at the moment, as you can notice, it's kind of plateau, right? So what's next is the question. And does it mean that household debt is reducing? Does it mean that the problem is going away? I'm sure everybody can answer that. Probably not. Now, let's have a look at the table on the left-hand side. According to our database, the largest amount of outstanding household debt in Thailand is on housing loan. Well, to me, that is still okay. It's housing loan, right? The second largest, though, is personal loan. And to me, it is a bit worrying, but we have to hear from others how they feel as well. And then auto loan. So that's the outstanding, the amount. But if we look at the percentage change, we can see that auto loan is actually not growing, is contracting. We can see that personal loan still on the rise. We can see that loan for agriculture is actually occupational, is professional, it's economy. It's not growing, it's contracting. Another interesting part of this table, you can see, is nano finance. But don't be alarmed. That's because we just received new member. They just contribute to our database. That's why nano finance shot up. But even without that particular member, we can see the trend of nano finance going up as well. So I would like to draw our attention to nano finance and personal finance that tell us a lot about what is going on in household debt at the moment. I'm not showing the account number, but I'm going to tell you here that if we look at the account, it's growing a lot as well. Whereas we see the plateau on the amount, but number of accounts still growing. So people are still borrowing, but they are able to borrow at a smaller amount each time. That's our analysis. Then let's have a look at debt quality. So according to our database, if we look at the number of accounts, we can see that NPL is around 10.4%. Well, our definition of NPL is that the debt overdue 90 days and over. But if we look at the number of accounts, we can see that NPL is around 10.4%. For the amount, it's around 9%. If we look at the amount of NPL in the system at the moment, we can see that it's trending up, not so steep, but trending up. Whereas special mention, not 90 days, it's trending down, but it's a cycle. If you look at the yellow line, you can see that it's a cycle. So it's coming down at the moment. If you look at it, you can predict what's going to happen next. And if we look in the details of debt quality, we can see that the majority of NPL is in personal loan. Again, to me, this is alarming. Auto loan is a big problem as well. I have been talking to several auto loan company, and they are worrying, and they said their business is not growing at the moment. If we look at the percentage change, we can see that NPL is growing. To me, it's a worry in housing loan. Don't people want to protect their housing loan with their life? But we see the rise in NPL of housing loan. What does it mean? So I think we should hear further, more details, more analysis from the industry, from Kun Payong. Thank you.
Thank you. Up next, Kun Payong.
First of all, good morning, and thank you for inviting me to join the forum today. Just to add on the points of the household debt situation, the household debt is the layer that I would say overlay on top of the basic economic foundation of the country. So if you step back and look at the economic foundation of the country, it is interesting that we have almost among the highest informal economy as part of our overall economy, 48%. And this is the data from the World Bank. And if you look at, as a result of the 48% informal economy foundation, we see 53% is informal labor. You look at 68 million of population, only 11 million filed the income tax, and only 4 million paid the income tax. And you can work back that 69 million require welfare support from the government. Then you look at the SME, which is only 28% in the formal part of the economy. So this is how the structure of the basic economy of the country is based on. And that will provide the ability to create debt on top of it. So if you look back, the consequence of having this structural foundation is that the first one is the big part of the population will have lower income. Then you talk about the high degree of inequality. Then you're talking about the substandard governance. Then you talk about productivity issue and the resilience to deal with the shock is limited. And as such, it's not as sustainable as it should be. So that's the foundation. Then you look at another data. The economy, the GDP number, is driven by the large conglomerate. Only 1% of the firms in Thailand contributed 65% of GDP. What does that mean? When you look back into the SME, SME contributed 30% of GDP, and yet it employs 70% of the employment. So that is the foundation of the economy. Then we touch upon a lot of financial inclusion, whether the household debt is properly available, appropriately available to all Thais, to all household. Then we have, if you look at every engine in the economy, the total of financial institutions equivalent, we have over 3,000, right? You count from proper commercial banks, non-bank, co-ops, we talk about credit union, pawn shop, over 3,000. Do we have enough competition based on this structure, right? The number explains itself. then if you look at the current situation of the household debt, right, you see, and this is the data from Dr. Jip, the NCB, we look at the NPL, which is the lower part. The NPL happened to be heavily concentrated in the area of job status, the young generation, particularly in the car loan and also the personal loan. If you look at on the right-hand side, the age population, once they get into the retiring age, then they incur more and more household debt and also more and more NPL, and they have to depend upon beyond banking and financial institution system to survive. And what does that mean, right? If you look at the next page, we talk about 90% of household debt, right? 89%, 91%, it depends. It's around there. We don't have a reliable data to size the informal debt of Thai economy. So we decided to, Krungthai Bank have worked with School of Economics of Chulalongkorn University to do a formal research. And the number that we find, the net informal debt, is about 14%, right? And if you look at the deeper level, then if you look at the gross number, you see 13%, right, is having the debtor status as well as the creditor status in the informal debt side. What does that mean? It shows that there is a certain part of the economy or the last mile that the formal financial system cannot reach out. It is about the last mile issue, right? So when you touch upon that, it explains the foundation of the household debt. On the other hand, if we believe these reflect the foundation, appropriately reflect the foundation of Thai economy, then we should know how to fix it, right? And if you look at this arena, we have huge opportunity to fix it, and it can't be a better moment than the current situation.
Thank you, Ka. And lastly, Dr. Rat, could you please share your view? Thanks.
Actually, the household debt and also the landscape of all the debt in Thailand is not that easy, but I still see the hope. But we cannot use the measurement that we used 25 years ago when we addressed the Tom Yam Kung economic crisis. This is the landscape that I try to give you the flavor of how the AMC can handle the debtors. If you look the debtors as the patient and the AMC is the doctor, you can see that right now we have around 2 trillion debt in terms of the amount. But when you look closely, 40% is the household debt. So if we can stretch the capacity of the hospital, the AMC in Thailand, we have around 86 members, but 86 members, we have to handle the 2 trillion debtors. 1 trillion is the NPLs, and another 1 trillion is the special mention. But if we look closely, we have the capacity to cure the patients per year around 100 billion in terms of the amount of the NPL. So we have to take another 7 to 10 years to address all the debtors. But if we enhance the capacity of the hospital, all the 86 hospitals altogether, we can handle another 100 billion a year. So it takes around 4 to 5 years to get things done. But in real life, everything is not so static. It's very dynamic. So we need the light at the end of the tunnel. So right now, if we try to transform all the NPLs, all the debtors, and then we can get the kill for them. The kill that I mentioned, we call reperforming loans. So we give them the chance to become normal again in terms of the banking landscape, and they can do the normal business operation, including the individuals, and that is the solution that all the 86 AMC right now try to get the solution and propose to the central bank, and also we had a discussion with NCB. So right now, I think we can see the amount of the big picture. We have 2 trillion as the starting point, but if we can work together and then we can do more, whether you can call the national AMC or the existing AMC, we can find a solution to the problem. Thank you.
Thank you very much, Dr. Rax. Next, let's now turn to the potential solutions. What measures could be effective in reducing household debt level back to the pre-COVID level? Maybe Dr. Roong, could you please start us off?
Thank you, Khun Peach. Well, first of all, in response to Dr. Rak, who wants to expand the capacity of hospitals, yes, we have heard you, and we are probably accommodative in terms of expanding the capacity of hospitals mentioned. But beside that, I think in order to tackle the issue of household debt, we need to do both the shorter term issue to at least, sort of go through this soft patch of the economy and make sure it's sustainable. And then we also need a longer term solution, which is address the structural issues that we talked about earlier. So in the short run, I think monetary policy stance would be accommodative, but that in part is not just about the key policy issue. It's also about transmission into bank rates, which of late we have seen more transmission, but it also means reducing credit risks that have been worrying the industry and lenders. And to do that, I think we need a solution that is also longer term in the sense that, lenders are not going to lend unless they see light at the end of the tunnel as well for each of the industry that we feel might be adjusting after the US tariffs and, supply chain adjustments and things like that. So I think we're working with the industry, we're working with TBA, we're working with Kokoro, I'm not sure what they're called in English, but the Thai chambers and things like that, to seek longer term plan and to have a structural upgrade that is more tangible for each sector, and also couple with that transformation loans, and perhaps in addition to that, credit guarantee and other things that would assist the weaker firms in the industry so that they have a chance to survive. So I think, and also in the shorter term, we have already issued a number of financial measures to relieve the debt burden of targeted groups. So I'm not going to go too much into that, but I think I'm going to highlight things that are of the longer term. I think for the longer term, as I mentioned earlier, we cannot grow out of this unless we have higher income. From Dr. Dr. Luxmon's graph, you could see debt leveling off, but that leveling off reflects also the debt to GDP level that has been coming down. But I think I would have liked it better if debt to GDP has come down because of higher income rather than deleveraging. And also another point I would like to make is that if we can bring people from the informal sector into the formal sector, that number might not reduce, but it means a healthier household debt to GDP in total. So don't be just sort of like, too focused on the numbers per se, but make sure that we look into the greater detail and the dimensions of that household debt also. So I have been talking about bringing people from the informal sector into the formal sector. So what we have done, I think, first of all, we have initiated plans for an ecosystem that would allow the use of data. So we have initiated the project that some of you might have already known, like open banking kind of that we call our version, Your Data project, so that customers own the data, they can send data around. That is still in the formal sector. However, we would like to enlarge that into the informal sector in the sense that we have asked the government to contribute a number of data sources like utility usage and things like that. So this is to pitch into the untapped market. So I think that that's part of the key issue, the key initiative we have been doing. Of course, we have also introduced new players into the banking industry, virtual banks. They're banks, but I think what we expect them to do is to pitch into markets like the untapped, the underserved. Kun Payong did apply for it also. So you can ask him also what he plans to do, but we expect them to invest heavily in data analytics capability, in data usage, and to also bring in the underserved. On top of that, I think we are also exploring, I would have to say, perhaps opening up a sandbox, a regulatory sandbox, to bring underserved borrowers into the formal system. And of course, with that, I say a sandbox because some regulations probably will have to be adjusted. And the central bank is looking into ways that perhaps we could do that, work with a closed environment first, but see what would be proper. And we would have like, measures to see what that we can actually bring those in the informal sector into the formal sector.
Thank you very much, Dr. Roong. So moving on to Kun Luxmon, how can credit bureau contribute to improve household debt, and is it feasible to change the NCB participation from voluntary to a compulsory basis?
Thank you, Kun Peach. Well, first of all, NCB Credit Bureau, as people know us, we are a data company. So basically, we provide facts and figures. Facts and figures to lenders, to consumers, to policymakers. And these facts and figures contribute to financial health of people, to risk management of financial institutions, and inform policy decision of regulator and policymakers. That is the first thing that we can contribute to help. Then how best can we do that? Again, data. But if we look at the problem of household debt in Thailand at the moment, I would say the underlying problem is income, as Dr. Roong mentioned, and also structural of the economy, and that's something we have to work on. We were just coming out of the wood from COVID-19, and then came pockets of wars, then came geopolitics, geoeconomics. So under this circumstance, I would like to ask everyone to redefine risk management and financial health. You know, I have been talking to colleagues in many other countries during the few months. And all over the world, people are thinking about new way to look at risk management, because at the moment it's not about trying to prevent NPL, but it's about the business is not growing. It's about how we can identify pockets of potential here and there so that we can lend hands to those people. And in turn, how we can help improve financial health of people in the society. I wonder if our data can help. I think so, and I would like to do so. And I think to look at household debt, we need to put a longer term lens on. That is very important. Well, NCB, I think we have been doing a decent job on risk management, on early warning, but there are rooms that we can help more. What about we can do early warnings and some alerts for financial institutions and also for consumers on fraud, for example, because through our data we can detect some abnormal pattern as well. So this is something I would like to explore and contribute more. And I also ask myself how we can better help enhance financial health of Thai people, which in the end enhance prosperity of the whole economy. That is something we think about a lot. And to have comprehensive data can help. So to your question about voluntary or compulsory, in an ideal world, of course, I would like to have all the data that we can have so that we can better analyze, we can better make tools to help people. But the law in Thailand is not allowed at the moment. We also have to think very carefully as well, I think, because having more data is good, but we should not compromise the quality of data coming in. And we can certainly not compromise data security of the people. So this is something that we pay much attention on as well. And in the world today, there are many other sources of data. As Dr. Roong mentioned about the Your Data project of the Bank of Thailand. In other countries, people are using a lot of data to manage risks as well. There are other alternative data that we can use. On the one hand, this data can help manage risks. On the other hand, as I always mention, this data can help improve access to finance, help financial inclusion, and go towards prosperity of the nation. NCB would like to be able to use that data to provide better service to financial sectors, to consumers in Thailand as well. Thank you.
Thank you, Ka. Next, Kun Payong, could you please share how banking association could contribute to reduce the household debt? Will rate cuts help? And what are other measures needed?
First of all, banks are intermediaries, and our job is to collect the liquidity in the system and reallocate to where it is needed, and make sure that the economic value is created through the process. So that's our job, right? So in the situation the industry have discussed, and we look at the principle that we think we should embark, and we look at the 5 key principles. First, it needs to be inclusive, and inclusive needs to be clear in the sense whether it is an attempt through the welfare approach, through the empathy approach, or through the profitability and market mechanism approach. We should not mix and make it not as clear as it should be. And the key is we are in the world of market mechanism and capitalism. So we must ensure that the reallocation of resources can be done properly and through banking system. Secondly, it should be on the fairness basis, right? On the rule around it and on the regulatory framework. Of course, now there's a lot of talk about whether it's the right pricing risk or whether it's an overly expensive risk. Then we should talk about the risk-based pricing, right? If you talk about the risk-based pricing, to what extent can it be risk-based? Can it be down to individual where somebody pay 80-90% interest rate, or it should be on a portfolio basis where it's peak at, let's say, 40 or 50%, or it should be capped at 5% or 10%, right? The number will depend on market mechanism. And it should be ensure that moral hazard will not be created as an unintended consequence. That's the second part. The third part is the level playing field. There should not be a structural issue where somebody who create the ladder debt get a seniority on that debt status than those who have been the creditor years prior to that, right? That regulatory impediments need to be readjusted. Also, the availability of the so-called formal, as what Dr. Chip has shown on the NCB, there are still a number of financial institutions or non-bank are not in the NCB system. How could they operate, right? If they are not in the system, are they arbitraging the structural regulatory issue, or are they competing on a fairness system? Or the regulatory structural issue has created an alternative way of serving the last mile that is not necessarily facilitate the fair allocation of the resources across the nations. And also, you talk about open competition. Do we have access to the data appropriated by all competitors? And all of them, do we have a newly challenging banks or challenger to provide the lending services compete on the same level playing field with the traditional financial institutions? And the last thing is it's got to be healthy borrowing. A lot of them has gone to the consumption, and has it gone enough to create the wealth to the family, to build their future career, to create the household-based business? Maybe it's not. And how can we facilitate that? That are the principles that the industry have agreed and look at. Then we recognize the challenge as well as the opportunity on the household debt situation. So we, in the process of collaborating with the recently launched You Fight, We Help program, we have come up with the three phases or three-step recommendation. And this recommendation has been in coordination with the government, the Ministry of Finance, the Central Bank, the Thai Bankers Association, and also the Federation Thai Industries and the Thai Chamber of Commerce. First, we recognize that we need what we call the first step support to the situation. That means it is the program that meant to be temporary on the You Fight, We Help. And it's meant to be a short-term program. It's not a sustainable program. Then what is next? We recognize that those household debt burden happen because of the gap in social safety net, right? You talk about if you are sick, if you have to be hospitalized, if your kids has to go to school, if your parents are old and need support, accident that you have gone in through, so on and so forth, right? So do we have adequate social safety net, or do we have a too fragmented social safety net at the moment, right? And that needs to be fixed. And we are glad to see that the permanent secretary of the Ministry of Finance has recently come out and say that the negative income tax will be imposed by 2027. So that means that it's less than 2 years from now. And that means that the second phase of the measures has been already announced by the Ministry of Finance with a clear timeline. So that means that it is coming. So what does that mean? That means that the system will have appropriate data of Thai population, right? You will have not only the debt situation, but you will have their income and the wealth side of the equation, and also the protection that they have. And if the country has that information, then the right decision can be made and it can be well targeted. Then the third measure, right, is you need to drive the income side of the equation. How can you do that? People need to have job that pays appropriately, and then the job that they've worked for can compete, can sell in the open market world. So how can that be happening? You need collaboration between the banking and the real sector, including Thai Chamber of Commerce and also Federation Thai Industries, as well as the right incentives from the government, whether it's soft loan, whether it's a tax relief, or whether tax benefit, you can name it. So one thing that I can share in my view, an opportunistic window that is well coordinated between the government, the central bank, and the private sector, the three associations, on these three measures. And I'm happy to say that we are currently, and not yet announced, that we are working on the white paper on the back of what is happening on the reciprocal tariff. Right? We think it is the moment of opportunity that we need to prioritize. And we know that the resources available in the public, not only on the lending capacity, but also on the public debt, that the government need to come in and play their part. So the collaboration between the three parties is being worked on, and the milestone is making good progress. And at the end of the day, lowering interest rate is just a temporary tool. And once it happens, then how can that support and incubate the economic growth engine in a sustainable way? So the second and the third measure will be critical. I would put the lower interest rate into the first measure. So that is a temporary, and it needs to come with the second and the third. And the second and the third is currently being worked on. Thank you.
Thank you. Next, Dr. Rak.
Just like that, Kun Payong just mentioned, we have around 3,000 lenders, both banks, non-banks, and informal banks, or whatever you call the lenders. But we have only 86 AMC. So we have only 86 hospitals. So we have two solutions that we try to propose to the government right now. First, we expand the capacity of the hospital. How we expand the capacity of the existing 86 hospital? We need the soft loan. Instead of use the mechanism that we call soft loan to other programs from the government, we need the soft loan to expand the capacity. And the maximum capacity that we can expand is around 3-fold. So 3 times that we can expand our existing capacity. And the other program that we might need is the relaxation of regulations. For example, like the new coding that we call 054 for the reperforming loan. And last but not least is we have to come up with another JV partnership program that we already done successfully with Ari and Arun. So that is the first bullet that we try to tackle the problem. The second one is like when you see all the newspaper are talking about the national AMC. My opinion is not about creating the new vehicle, but we can use existing vehicle. For example, RE AMC. We can use the RE AMC to absorb the household debt from the SFI. And also we have the multi-banks that can come up with the AMC for themselves. And the needed actions that we need is also the debt pooling program, the new recording system, the good governance of data that we can retrieve from the pools. And that is the key success factor that we can move on. So together with two-layer solution, we can tackle the 2 trillion whatever you call. We have 1 trillion as the NPL, another 1 trillion is the special mention. And I think we have to go beyond the normal operation, we might need to work hand in hand with the banks. So we can use our service and extend to the bank to tackle the special mention category. So that kind of preventive and also proactive action from the AMC population can help the banks, the lender, to address all the problems that we can see or foresee right now. Thank you.
Thank you, Kat. To wrap up all the measures that the panelists has mentioned, with the policymaker are preparing several measures, and we are developing database and infrastructure for banks and especially AMC that are trying to resolve the legacy issues. Do you think that with these initiatives, it will improve the economic growth in the medium term and bring back the investment opportunity for investors in this room? Thank you. Let's start with Dr. Roong.
Well, I would hope so. And yes, I think if we tackle it, Kun Payong was talking about our coordination, and trying to submit a white paper. And I think basically the white paper that he was mentioning tries to tackle the issue of coordination failure among parties, and I mean among sectors in Thailand. So I think that should help, and that should actually push us forward significantly if we can accomplish what is outlined in that white paper that he mentioned. Beyond that, I think there's still a lot of opportunity for people in this room and beyond. Just to mention things like what Dr. was saying, I think she stopped short of saying that we need things like financial scores. We need things like fraud scores. Data can help that. A lot of people can do that. We even encourage scores to be floating around, even sold. You can make money that way also. And I think analytics, system networks, and things that support things like this would definitely have a lot of opportunity going forward in Thailand. And of course, we talked about things like, wealth aggregator, income aggregator, to help people manage their financials better. I think that is still a huge step and huge opportunity for Thailand. And of course, the lending business itself. If we try to pull people into the formal sector, I think that's also means a lot of lending opportunity. Thank you.
Next to Kun Luxmon.
Well, our role as National Credit Bureau is easier than the others on this panel. Basically, we just have to provide quality data. We would like to have more data. We would like to have more detailed data so that we can provide support to all the policymakers, the industries, to solve the problem of household debt sustainably in the longer run. And we would also like to play a role of a financial health platform, perhaps, so that we can help identify opportunity as well as identify risk. We can help people to have better access. We can use our data. The more data we have, the more detailed data we have, we can provide data for policymaker and regulator to ensure that they are the lighthouse, as Kun Payong mentioned, to the economy. Thank you.
Thank you. Up next, Kun Payong, please.
Just to echo, the collaboration between the government, the private sector, and the all citizens will be critical. We are, again, I would like to emphasize, we are in a market mechanism system, so we must respect the voice of the market. And the voice of the market will judge us based on whether we drive or address the situation in a rational way. So we must be very focused in supporting and enhancing the data-driven economy and also the skill-based and economic value created based economy. And when we talk about the data, it's not just about the NCB, it's outside of the data that can be alternative to the typical traditional data to make the right decision and the intellectual decision. Then, if you look at the skill-based economy, we must heavily focus in uplifting the skillful workforce. And we have tremendous opportunity. Just a quick final data, we have 91% of the population have access to internet, but we only have 6% of the population engaged with ChatGPT. And this is statistic data. What does it mean? We have the right infrastructure, and we have huge opportunity to monetize the infrastructure that we have with the skillful workforce. And the last part is, I would say, this is the right window. You're talking about it can't be, I would say, on one hand, it's like a perfect storm, but on the other hand, I would like to say it's a perfect opportunity to make the right action and the right decision.
Thank you. Lastly, to Dr. Rakha.
I would like to close my session by saying that within 86 hospital or 86 AMC, we have around 3,000 workforce. On the sunny day, the good banks can issue something like the automation system, credit scoring with good governance of the data, everything. You can do it by use the automation. But for the bad bank operation, we need individual, we need the doctor. So when the good banks see no use of your workforce, send them to me. Thank you.
Okay, thank you to our panelists for sharing your insight and expertise, and to our audience as well for joining us in this conversation today. I hope you found it informative hearing about the debt problem and the potential measures that could bring back the opportunity for our economy in Thailand. Thank you.
Thank you very much all the panelists and moderator for the fruitful information.